The stock market, if you haven't seen it or heard about it already, plunged today. Take a look at the numbers. The Dow down 512 points, closing at 11,383. The Nasdaq down more than 136. The S&P 500 off more than 60 points today. And the sluggish U.S. economy has some experts worrying we could have a double-dip recession. The latest signs of weakness, first-time jobless claims edged only slightly lower last week, and weakened European stocks don't help amidst concerns that bailouts may ultimately be needed for Italy and Spain. We're joined live by financial analyst and advisor Dave Wentley. And Dave, if ever everybody need a little hand-holding, it's tonight. Give us your sense of why we saw this plunge today.
Well, you're right about the hand-holding. Even to people who have been in this business 30, 40 years, a 500-point drop on the Dow is enough to sit up and take notice. The reason we saw the precipitous drop had a lot to do with what you just said. Europe has got some issues. The Eurozone debt seems to have looks like it's expanding beyond the smaller countries and perhaps into Italy and Spain. And there's concern that they may not be able to have a handle on it. Also, some of the economic data that we've been seeing the past couple of weeks has been, well, anemic at best. And we thought we would be further along in this recovery. What I tell people now is, as hard as it seems, don't panic. We are in a recovery. This is not 2008 all over again.
Continue on that train of thought. Your best advice for the average investor who's going to wake up tomorrow morning glued to the numbers. What do you say to them about staying the course here?
Well, stay the course, because if you are invested properly, and by and large most of the people I know are very well invested, this will end. We saw a dramatic sell-off today. I think it's the culmination of the market wanting to kind of purge itself, if you will, and I think you'll see it bounce sometime, if not tomorrow, early next week. This is not atypical in a recovery, by the way. Since March 9th in 2009, when we bottomed, we've come a long, long way. And this is what we would call a routine correction, although it happened so violently and so quickly, it's got people rattled.
So stay the course and steady nerves for now is the bottom line.
Yes, steady nerves, exactly. But again, like I said before, don't look at this as a long-term event. We are in recovery. We are not going through. I don't see a double dip, and I certainly don't see us back in where we were in 2008.
Dave Wentley, investment advisor, thanks for that hand-holding this night. A lot of people, I'm sure, appreciate it.
Thank you.
A lot of reaction, of course, to the stock market plunge from social networkers. On the WPTV Facebook page, Rick Torrance wrote, "This is all very scary. If you ask yourself if you're better off today than you were 4 years ago, I'd say no." And Carrie Copeland says, "Europe's in bad shape. Our president, in her opinion, has no answers. And our debt, she says, is out of control. Can we be that surprised?" End quote. There are a lot of comments on the WPTV Facebook page, and we invite you, as always, to join the conversation.